Before Chamath Palihapitiya became a renowned venture capitalist and founder of Social Capital, he started his life off with humble beginnings. Born in Sri Lanka, his family moved to Canada as refugees when he was only 6 years old. His family struggled financially and lived on welfare, but that never bothered him even though he had to sleep on a mattress that he pulled out from the closet every day. Instead, he got interested in taking a risk and making money very early on in his high school days. He started an amateur casino and acted as the house, letting his friends gamble away their lunch money to him. In 1999, he graduated from the University of Waterloo with a degree in electrical engineering, but again dipped his hand into risk-taking by becoming a trader for a few years. He worked at investment bank BMO, Best Burns, but eventually moved to California in 2000. Chamath became AOL's youngest vice president, where he was in charge of the instant messaging division in 2004. He wanted them to buy Facebook, but AOL was going through too many problems of their own. Eventually, he left AOL to join Mayfield Fund in 2005, but Facebook's potential never left his thoughts. Given Chamath's experience, Mark Zuckerberg, the then young founder of Facebook, asked him to leave his current job and join in on a once-in-a-lifetime opportunity. Assessing this opportunity, Chamath surmised that despite all the possible outcomes monetary-wise, he would definitely walk away having met some of the most intelligent people in the field and learned something valuable no matter what. And so, a few months later, he left the investment fund and joined Facebook as a senior executive, tasked with increasing the startup's user base. Under his leadership, Facebook grew its user base from 50 million users to 700 million just 4 years later. Quite the astounding accomplishment, but it was not without harsh rumors that Chamath was a bully and fiercely pushed his subordinates to achieve his ambitions. After his 4-year tenure, he eventually left the startup company and went on to start his own investment fund called the Social Capital Partnership. During his time at Facebook, he continued investing on the side, a notable one being Palinter, which recently had its own initial public offering not too long ago. As such, investing never left him as an interest, and finally he moved on to pursue his next venture. A year following his departure, Facebook had their initial public offering and gave Chamath quite the return on his investment. In the beginning, the investment fund focused on the healthcare and education sector, but with technology on the rise and Chamath's experience in that sector, the investment fund made notable investments in well-sought-after companies. These companies include Yammer in 2011, which was eventually bought by Microsoft, and Imperium in 2012, which was acquired by Google. In 2015, the fund changed its name to Social Capital and continued to raise money to increase its assets under management. They also had Palinter founder and Facebook early investor Peter Thiel join as a limited partner. Having a notable investor join helped increase the venture capital fund's credibility, and they were able to raise $600 million in a round of funding in May of 2015. Following the new round of funding, Social Capital would invest in a popular communication platform, Slack, and Chamath would join the company's board of directors a few years later. Though it seemed like things were smooth sailing for the first years of their inception, complacency and personal matters would shake up the investment fund in between 2017 and 2018. It started with the departure of Mamoon Hamid, who left for rival investment firm Kleiner Perkins. Hamid was considered the top rainmaker at the firm and led the investment in Slack. Losing him sent shockwaves to the other partners, and everyone took notice. In addition to his exit, there was a new round of recruits that would alter the team and strategy of the firm's investments. Seeing this, the limited partners were not happy as the change was not what they had signed up for. In a report by Axios, Chamath was not fulfilling his duties as managing partner, and instead away in Italy attending to his personal matters. As such, there was a swift and mass exodus of top partners. With the departure of many key executives, many would consider Social Capital as good as done. With the investment firm on fire, Chamath reinforced and continued the fund's focus on making data-driven investments and playing their hand in using special-purpose acquisition companies, or SPACs. Social Capital was the first in the industry to utilize artificial intelligence to select investment targets. The firm used data-driven decisions to assess risk tolerance and potential success instead of relying on a venture capitalist's intuition. The possibility of a startup succeeding is slim to none, and the competition is fierce. Oftentimes, the venture capitalist that is leading and assessing the investment is betting on the founders to persevere through unforeseen obstacles ahead. Moving away from this traditional method, Chamath distinguished his fund by using a highly data-driven investment approach. After the shakeup of Social Capital's management, Chamath announced that they would no longer be accepting outside capital and instead will operate as a technology holding company. Over the next years, the firm would offer and popularize SPACs to startups as an alternative to initial public offerings. How SPACs work is when sponsors with expertise in a particular field form a company and seek underwriters and investors for its offerings of shares to the public. The company has no operations, and its only intentions are to take the money from the IPO and place them in an interest-bearing trust account. The money can only be used to acquire another company or returned to investors. This protects the investors and makes sure the money is used for its intended purpose, otherwise returned to them if no acquisition is made in 2 years. After the acquisition is made, the acquired company is listed on one of the major stock exchanges. IPOs can be quite pricey and be a long, arduous process for a startup from the time of recruiting underwriters to listing date. This alternative option is advantageous in that it is essentially a faster process and receives less scrutiny. Because the target acquisition is unknown to investors, SPACs are also known as a blank check company. In 2019, SPACs had a record $13.6 billion fund raised, and over 50 SPACs have formed in 2020. In Social Capital's case, Chamath became known as the king of SPACs. A high-profile SPAC deal led by Social Capital involved Richard Branson's Virgin Galactic. Chamath formed Social Capital Hito Sophia Holding and bought 49% stake in the spaceflight company for $800 million before listing them on the New York Stock Exchange under the ticker symbol SPCE. The purchasing of Virgin Galactic allows the SPAC company to acquire founder shares, giving them a steep discount of the target company. With shares purchased at 0.002 cents per share, Social Capital and Chamath made huge gains converting the startup into a public company. Chamath plans on continuing bringing startups to public listing through SPACs and investing in other SPACs deals outside of Social Capital. He is reported to have a net worth over $1 billion, a minority owner of the Golden State Warriors, and very vocal in his criticism of tech companies. In 2017, he stated he regretted his role in growing Facebook's user base, saying, "Dopamine-driven feedback loops that we have created are destroying how society works. No civil discourse, no collaboration, misinformation, mistruth, and it's not an American problem. This is a global problem." He was also critical in a leaked email of Airbnb's founders, who received a $10 million dividend payment as the home rental company was delaying their IPO. Given his vocal nature and pioneer of SPACs, what do you think of Chamath Palihapitiya as a venture capitalist? Would you invest in a SPAC? Leave a comment down below. If you like the content, leave a like and subscribe.